Hello friends, welcome to Commerce Guide. This is Pranali. Today's video is all about the most important terms in accounting that are sundry debtors and sundry creditors. So we'll be seeing the meaning of them both and the differentiation between them. Okay, so let's begin with today's video. First, let's see who are sundry debtors. So a sundry debtor is a person who receives the goods or services from a business in credit, in credit, or does not make the payment immediately and is liable to pay the business in future is called as a sundry debtor. Okay, now we'll see it with a simple example. Suppose this is a person. Okay, this person is receiving the goods or services. Okay, he is receiving the goods or services, and for that he is not making the payment immediately. Okay, he is not making the payment immediately in cash, but he is making a credit transaction. Credit transaction means what? He is not making the payment immediately, but he is promising that in future, okay, in future he will be returning the money back to the business. Okay, so he is receiving the goods and is not making the payment immediately and is promising the business that in future he will be paying the money. Then this person is known as who? He is known as the sundry debtor. Okay, he is known as the sundry debtor, or he is known as the borrower. Borrower, why? Because he is receiving the goods and is not making the payment. Okay, so a person who receives the goods or services from a business in credit or does not make the payment immediately and is liable to pay the business in future is known as who? He is known as a sundry debtor. Fine, clear. So now we'll go to sundry creditors. Now, sundry creditor is a person who gives the goods or services to the business. Okay, who gives the goods and services to the business in credit. Okay, in credit, or does not receive the payment immediately, and is liable to receive the payment from the business in future is known as who? He is known as the sundry creditor. Okay, this is fully opposite of sundry debtor. Okay, sundry debtor was who? He was receiving the goods or services, and sundry creditor is a person who gives the goods or services in credit and does not receive the payment immediately. Okay, we'll see with a simple example. See, this is a person, he is giving the goods or services or selling the goods or services to the business, but for that he is not receiving the payment. Okay, he is not receiving the payment immediately in cash, but he is being promised that in future he will be paid the money. Okay, in future the business will pay the money to this person. Okay, then this person is known as who? He is known as the sundry creditor. Okay, this person is known as sundry creditor, and he is the lender of the goods. Lender, why? Because he is lending the goods or services and he is not been made payment for that. Okay, he has not received the cash, but in future he will be receiving the cash. So this person is known as who? He is known as the sundry creditor. Okay, so we'll see a simple picture here. Okay, now suppose this is a bank. Okay, now what is the primary function of the bank? To provide the loan. Okay, to provide the loan to individuals or companies or institutions or business and all. Fine. So your bank is lending the money. Okay, is lending the money to a company and to a person. Okay. Now suppose this bank is giving rupees 50,000 loan to to a company and rupees 10,000 to an individual. Okay. Now here bank is lending the money. Okay, so this is what this bank is known as a creditor because he is lending the money. Okay, and the receiver of the money, that is the borrowers, these are known as who? These are known as the debtors. Why they are known as the debtors? Because they are receiving the money from the bank and they're promising that in future they will be paying this cash to the bank. Okay, so immediately they will not pay the cash, but in future they will pay the money back to the bank. So these are known as what? The debtors, and the person or the bank who is lending the money to the individuals or to the companies, these are known as what? Creditor. Fine. So this was the meaning of sundry debtors and creditors. Okay, hope it is clear. Now we'll see the difference between them. Okay, now here we have three columns: basis of difference, sundry debtors, and sundry creditors. First, let's see what is the meaning of it. I have explained it to you. A debtor is an individual or entity that owes money to a business. A creditor is an individual or entity to whom a business owes the money. Fine. Now we'll see what is the origin of sundry debtors and creditors. Okay, now the sundry debtors have been derived from the Latin word debere. Okay, from the Latin word debere, which means to owe. To owe means you have to pay the money. Okay, to owe means you have to pay the money, means you have received the goods and for that you have to pay the money. Okay, now see sundry creditors. Sundry creditors have derived from the Latin word creditum. Creditum, which means to loan. Okay, which means to loan means he is providing loan to another party. Okay, and they will pay back to him in the future. Okay, so this is what to loan. Now next we'll see what is the nature of sundry debtors and creditors. Now here sundry debtors, they have a debit balance to the firm. Okay, sundry debtors have a debit balance to the firm because the debtors are an assets for an organization because they will provide cash in future. Now debtors will receive the goods and in future they will provide the cash, right? So they are an assets for an organization. Okay, so all assets have a debit balance. All assets have a debit balance. That's why debtors account shows the debit balance to the firm. Fine. Now we'll see the nature of sundry creditors. So sundry creditors have a credit balance to the firm. Why? Because they are reported as a liabilities on your company's balance sheet. What are sundry creditors? They are the liabilities. So they come under the liabilities on your company's balance sheet. So sundry creditors have a credit balance to the firm. Fine. So now we'll see under which category do sundry debtors and creditors fall. Okay. So sundry debtors are shown as an asset. Now, as I've told you, sundry debtors are an assets. So they are shown as an asset in the balance sheet under the head current assets. Okay. Under the head current assets. Now, why under the head current asset? See, in balance sheet, we have current assets, fixed assets, and all. Now, fixed assets which are held for a longer period of time, they have a longer duration, and current assets which are there for a shorter period of time, that is within a year. Okay, so now sundry debtors are shown as assets in the balance sheet under the head current assets. Okay, because the payments are expected to be received from them in the current accounting period. Okay, in current accounting period, the payments are expected to be received, so they will come under the head current assets. Fine. So now let's see uh, in which category do sundry creditors fall. Now see, they are shown as liabilities. Now sundry creditors are who? They are the liabilities. So they are shown as liabilities in the balance sheet under the head current liabilities. Okay, why under the head current liabilities? Because current liabilities are companies' debts that are due within a year. Okay, they are due within a year, within a shorter period of time. So they will come under the head word current liabilities. Fine. So this was the difference between word sundry debtors and creditors. Okay. Hope this topic is clear to you. So if you have liked the video, do subscribe to my channel. Thank you.